Could Mr. Beast save young men? Would be, I think, a really relevant question to ask at this moment.
I don't see a role model out there that has a big platform and is well respected that can give an objective, rational view on how to make money, how to build a career, how to invest.
Your money and your health are the only two things where it's like, this is literally a life or death thing. We can't screw this up.
Right.
And so I think it's absolutely fine. I think it's great that Mr. Beast is buying Step and is going into the space. I think he's a very thoughtful person about the world, about ethics, about altruism, about helping his audience do good in the world. Like, I think this could be an amazing opportunity.
I have mixed feelings about this one. I want to be optimistic around all the good that can come of it, but man, there's a lot of structural forces here that could send this into a worse place. Hi everyone, welcome to the Free Toaster podcast. I am your host, Carlos Caro. If you're not familiar with the Free Toaster, we cover news at the intersection of consumer lending and marketing. I founded this after 20 years in the industry, after finding a void from media in this specific niche. To subscribe to our newsletter, check us out at thefreetoaster.com. Today, I'm really excited to introduce our guest, Alex Johnson. If you spend any amount of time on LinkedIn or X or Substack, you've probably seen his work. He has over 55,000 subscribers on his weekly newsletter. He runs a podcast. You can find him at fintechs.com. He recently wrote a piece on Mr. Beast's acquisition of fintech app Step. It hits hard on an area I've been covering lately, which is the intersection of social media and lending, and a market failure I've been seeing in that specific corner of the market. In today's episode, we talk about implications for both marketers and consumers, as one of the largest creators on the planet takes on the challenge of building a consumer finance business. I had a lot of fun recording this one, and I hope you enjoy it. Alex, I reread your newsletter from 7 days ago, and processing the message here of what's going on with Mr. Beast. Can you give the audience just a high level of what happened?
Yeah, absolutely. So we knew this was coming, right? Because Mr. Beast had filed a trademark for Mr. Beast Financial late last year. And so we knew that he was kicking the tires on financial services. The question was, how was he going to choose to get into financial services? And there were a number of different avenues available to him. And it looks like the way that he's going to do it is by acquiring I'm trying to be not too ungenerous, but like a zombie neobank maybe would be the way to describe it, right? Step was part of a wave of fintech companies that sort of appeared over the last 10 years. Really good time to raise money if you were building a consumer-based neobank. It claims to have attracted about 7 million users over the course of its life, offers kind of your typical mix of neobanking features, debit card, stored value account, high yield savings, credit building. So kind of your typical mix of different products. And it is being acquired by Mr. Beast. Now, they didn't give a purchase price for the acquisition, so we don't know how much it cost. I would hazard a guess that he got it for a pretty good deal, just based on kind of the lack of activity that we've seen from Step recently. I imagine this was just kind of them cutting their losses, and Mr. Beast gets a sort of fully functional neobank with a banking partner in the background. The banking partner is Evolve Bank and Trust, which has had some problems lately. We can get into that. And from everything we can tell, Mr. Beast is planning to sort of make this Mr. Beast Financial. So in the short term, I imagine that he'll run it kind of as Step and keep sort of the business running as is. But over time, reportedly is planning to really kind of take it in the direction that he wants a financial services extension of his brand to go. And he and Beast Industries have described their ambitions here a lot in like financial literacy and financial education terms. So helping young consumers get off on the right path and the right foot financially. It was reported in the Wall Street Journal, I believe, or the Information, that he is planning to launched like a dedicated channel on YouTube for financial literacy and financial education. Step has actually done quite a bit of work in that area, so he's going to be expanding that out. The 7 million users doesn't really matter since he has 467 million subscribers on YouTube. So obviously he'll bring a massive amount of distribution to it. And yeah, the question will really just be, is this something where distribution, just raw, overpowering distribution, can sort of win out over every other potential challenge?
Got it. To your question on what he paid, I'm looking at your newsletter piece comments. I mean, it gives us at least some baseline. So it was founded in 2018. There was a round in 2021 where it was valued at nearly $1 billion, 920 million. That's pretty wild to me. That in 3 years, this thing that probably had, I don't know. I'm gonna speculate that this thing had less than $20 million in revenue.
Yeah, I think that's probably fair.
I don't think that's crazy given the multiples we were seeing back then.
No, 2021 was a wild time, like a wild time. And I think in some ways that's really telling of this acquisition, because companies that are in that vintage, like the VC investors, if you talk to them now, they're just like, hey man, if we can just get our money back, we're perfectly happy to like let go of this one. Like the valuations were just so out of touch with reality, particularly given, and I think this speaks to the MrBeast acquisition, and this is your world, Carlos, user acquisition is just like horrible, right? And so I think like getting scale is the hard part. And for every Chime that there is out there, there's a Step, there's a Varo, there's even someone like a Current. Like there's just so many consumer-based neobanks. Even if they built really great products in those days, they raised a lot of money and they just ran into a user acquisition wall and they were never able to scale past it. And I think Step is one of that club.
Yeah, no, I agree. The other thing that strikes me about this, I had Step before my preparation for our chat today, Alex, was less than on my radar. It was like, it was in another solar system. So I hadn't heard anyone talk about Step. I hadn't seen Step in so your characterization of zombie rings true, at least for me personally. Yeah. I just hadn't seen them do anything. Do you know anything about the operating team today? How many people do they have? Are they still acquiring customers? Like, what can you tell us about the day-to-day of Step?
Yeah, I mean, I think again, zombie, I think it's uncharitable, but I think it's probably the most accurate word, because they do have a team there, obviously. Still, I'm not sure how many people. They are still open for business, acquiring new customers. But to your point, I haven't seen much in terms of like new, I get CC'd on every new product launch, every like new thing that happens in fintech. I usually get a press release about it. And Step has just not on my radar in any way, shape, or form. And so there haven't been any acquisitions. There haven't been any like major big product launches. The reason I knew about them primarily actually was because, and this is relevant to the MrBeast acquisition, they were sort of famous, 3, 4, 5 years ago for adding celebrities to their cap table, right? So they have like Steph Curry on their cap table, and they've got a number of different kind of celebrities, not anywhere near the sort of scale of MrBeast, on their cap table. And so they're well known for that. I think they are also well known for kind of targeting a slightly younger demographic. And so if you think about the range of neobanks that are out there, in the 2015 to 2025 range, neobanks typically targeted anywhere from people who graduated college and had like student loans to repay. So that's like a SoFi, down to like people who are like in college, and that's more of like a Chime sort of demographic, down to people who were not even in college yet and were teenagers and had to open up an account with their parents' approval. And that was like Step was very big in that space. Copper, any number of Greenlight even plays in like a lower end. So that sort of like teen, not quite a young adult, not quite in college, but hopefully keeping them as a customer moving through those different stages. That was sort of where Step played. And I think, again, speaks to the sort of surface level fit that Mr. Beast and Beast Industries probably found with Step, because targets kind of a similar demographic, speaks a similar language, very Gen Z sort of oriented, and very heavy focus relative to your traditional neobank on like consumer education, financial literacy. Everyone has like a blog with like financial services tips, but I think Steps is a little more robust than your typical neobank.
Got it. You mentioned earlier that he signaled an intent to build financial literacy content.
Yeah. Yeah.
I just went to his YouTube. I'm not a Mr. Beast watcher.
I'm not either. Well, you and I are too old.
Yeah, I'm too old. I'm 45 for those that don't know. So yeah, I'm well outside his demo. So I had to go to his YouTube channel, and I just I stack ranked by most popular. And I'm just gonna read to you some of the headlines.
Okay.
Because almost all of them have money in them.
Yeah. Yeah.
So money is a big part of the draw for watching.
Yeah.
There's contests and all sorts of stuff.
Yeah.
But let me just give a flavor for folks not familiar. $456,000 Squid Game in real life. It's a 25-minute video. Last to leave the circle wins $500,000. And there's a picture of like 20 young people in a field with like a red ring around them. So not exactly sure. That's an 18-minute video. World's most expensive flights. $1 versus $100 million car. So it's a picture of like a jalopy that's beat up, and right next to it, it's like this supercar. $10,000 every day you survive in a grocery store. 7 days stranded on an island. I assume there's some money there if you survive. And then ages. This one's funny. There's pictures of babies on the left, all the way to like grandmas and grandpas on the right. And the title of the video is "Ages 1 to 100 Fight for $500,000." So no, look, I get the appeal. These are unique takes. They're fun. Sure. There's money on the line. They remind me a little bit of Survivor, like back in the day. Yeah. So it's like modern day Survivor put on.
God, we're dating ourselves, Carlos. We're talking about Mr. Beast and we're talking about Survivor. No, but it reminds me a lot of that too.
Yeah. So now, given that and the other thing you mentioned earlier, he put in his public filing. I also noticed it last year.
Yeah.
There was a lot of mention of crypto.
There was.
And he launched, tell me if you've been on this, but this is what it appears to me. Like he launched a cryptocurrency with ticker BFS. It seems to have gone live this year in January. And it peaked on a valuation basis at 19 cents per coin on February 5th. So this is not all that long ago, Alex. Care to guess the price right now?
Oh, gosh.
After
let's
a 19
see.
cent per coin peak.
Maybe 1 cent.
It is about a fifth of a cent.
Oh, my goodness.
Between a fifth of a cent and a tenth of a cent. So if you got in on the hype on February 5th, you lost basically all your money.
Yeah. Yeah, which is not distinguishing it from many other celebrity crypto coins.
Now let's talk financial literacy.
Yes. Well, I mean, so it's interesting, right? Because I think this all speaks to a thing that I'm sure Mr. Beast understands very well, and that I'd be curious to see how it translates into product choices, right? Because everything that you described. And I sort of remember the moral panic when Survivor became a big deal. Do you remember this a long time ago, where it was like sort of like people who were even older than us watched Survivor and they were like, what is happening? Like, what is this? You know? And I think that it's interesting because relating it to financial services, I think young people today are fascinated by paths to wealth that don't go through traditional places. And I think the reason for that fascination is understandable, which is that there's a feeling among young people, justifiably, that the traditional avenues to building wealth are no longer viable for them. And this relates to like affordability and the cost of housing. This relates to the cost of higher education and the value of getting a college degree. And so there's this sort of like shifting social contract that I think makes young people believe, whether it's true or not, they believe that they need to do something different than what their parents did or what their grandparents did in order to have a good life and to succeed financially. So it's interesting, even if you're not going to participate in a contest where you stay in a field until everyone else leaves, it's at least compelling to watch people pursue a $500,000 prize in order to like get out of the sort of current economic reality that they're in. Or, you know, alternatively, I think crypto for a long time has appealed to young people in particular as sort of a different form of the lottery in a sense, right? Where to your point about like buying Mr. Beast coin, like everyone kind of knows that it's going to go to zero or close to zero. But the trick is, can you be the one who gets the thing, sells the thing before it goes to zero, and you win? And the fact that most people lose does not dissuade you from at least being interested in it, because some people win. And so it's a very sort of zero sum mentality, I think, that's taking hold in this generation. And a lot of Mr. Beast's content and a lot of his like moves to date have been very oriented towards, I think, reflecting back to Gen Z, this mindset that they have about financial services. However, the question is going to be, it's fine to do that from a content perspective, right? Like it's fine to make a video that like people are interested in watching because they kind of have this sense of financial nihilism and they get to see people scramble over each other to try to win $500,000. Mr. Beast had a commercial he did in the Super Bowl with Salesforce, amusingly, where there's like a $1 million prize for solving a puzzle. This makes good content. But when it comes to people's actual financial services experiences, you know, I mean, like, you want a checking account where you can safely keep your money and not worry, right? And I think even Gen Z, who's interested in, you know, kind of exploring alternative paths to wealth, they want a solid foundation that they then go off of and explore all of these different avenues for building wealth. And so they're not going to have a tolerance, I don't think, for a financial services product that's not a solid base. And so I'll be very curious to see how Mr. Beast kind of weaves together, like, how do you create content the way he creates? Well, also then the next video you post is, here's how to save for a 401k. Like, I don't quite understand, and I'm not a consumer of his content either, but I don't understand how you blend those two things together. But when you own a financial services company, you have to go from viral content to practical tips for how to manage your money. And like, the gap between those two things seems very wide. That's why in the reporting, they sort of described it as a separate channel that he was going to set up. And that actually makes a lot of sense to me, because it's like, hey, when you want to have entertainment, watch this. When you're looking for money tips, go over here, and we'll kind of keep them separate from each other. And I could even see him maybe bringing in other creators into his sort of like universe to do some of that, because it doesn't even really strike me as like a him type of video. It might be someone else. And so that to me is kind of the journey that he's on right now, is how do we go from virality to something a little more, you know, nuts and bolts.
I want to pause here for a second to tell you about one of our sponsors, Spinwheel. They've built an API that streamlines your lending application form with just 2 fields. When a customer shares just their birth date and phone number, they can go grab all the information needed to pre-fill their application form. So regardless of what channel you play in, you know that the higher the application rate goes, the lower your cost of acquisition becomes, and the more media you can buy to generate growth. Additionally, they can give you real-time verified consumer credit data and seamless payment processing, which can help you serve customers beyond the initial application. To see a demo, go to spinwheel.io or check out the link in the show notes. It'll hook you up straight with their head of growth.
So I want to go back to something you said around how young people are wired these days as it pertains to money. I think about this a lot. I have 2 young boys.
Me too.
One's about to turn 2 and the other turns 7 soon. So I would say that they understand the word money, and they understand you can exchange it for food and toys and stuff like that. But they're well beyond, you know, they're pre any of this thinking
they're
about
not watching
savings.
Mr. Beast.
No,
is what you're telling
not
me.
yet,
Okay.
thankfully. I think my oldest is probably a few years away from finding that really fun and interesting. But I mean, what strikes me about today's economy, today's
Mhm.
world, that's like materially different from the world we grew up in is, well, one, you mentioned the young people are drawn to making money in different ways, like non-traditional ways, different from their parents. And it's obvious to me why that's true, right? Anyone can flip on a microphone and record a podcast. Anyone can do a YouTube video. Anyone can start a blog. Anyway, I mean, and with Claude Code, man, let's not even get into that. It's
Oh
like
yeah.
it's wild. I'm starting to play with those tools, and it's
Yeah.
like it's blowing my mind a little bit.
Yeah.
But all that to say, as a creator, you can create product very easily these days. You can distribute on social media,
Yeah.
and the thought of holding down a job that pays you a fixed salary and caps your income,
Yeah.
I'd say for 99%,
Mhm.
salaries are going to be capped at what, $200,000, something like
Yeah.
that.
Yeah.
And now, if you're successful as a creator, you can make that much in a week, a month. Like it's pretty wild, right? So it's hard. I think it's difficult as a young person to not appreciate that your upside is way higher when you play independently, and also your freedom is much better as well. On the other side of the coin, I don't think it's ever been easier to financially destroy yourself. And I know you write about this a lot. I know you think about this a lot, but you think about things like crypto is an obvious one. You have fantasy sports. You have just traditional sports betting, but brought online into app
Sure.
format.
Sure.
And then you have what's playing out with like prediction markets and things like that, right?
Yeah.
Many of which are now incorporated into broker jobs. I'm gonna call Robinhood a broker job for a moment.
Yeah.
That may bother you, but I actually
No. I mean, technically, that's what they are.
I
Yeah.
think they are. I
Yeah.
think they are. But right now, and I'm a customer of Robinhood, and I've
Yeah.
used them for a few years. It was where I decided to buy some early Bitcoin.
hmm
And I think, all things considered, I think a reasonable choice. At least I didn't pick, what was the one that went, Sam Bankman-Fried's NFX.
Yeah. Yeah.
That like, or BlockFi. There were a few that got left behind.
Sure.
Fortunately for me, I picked Robinhood.
Mm.
But now I could literally bet my entire brokerage balance
Yeah.
on one prediction market outcome that could determine itself tomorrow, where I have a 1% chance of winning and a 99% chance of losing. Like, they would allow me to do that, which is pretty crazy. I shudder to think what the conversation would look like at Schwab or at Fidelity to even contemplate something like that, right? But now it's possible. So a young person can both create enormous upside and can give that upside back in minutes, days. In the context of all of that, what do you think Mr. B's responsibilities are related to running his new neobank?
Yeah, it's a great question, and I'm glad you framed it that way. I think the biggest thing that Mr. Beast is going to have to figure out is how much money he wants to make in financial services and how he's going to make that money. And I say it that way because one thing we know, based on some great reporting from Bloomberg, is that Mr. Beast's content business loses money. Now, it's possible that if he ran it slightly differently, it wouldn't. In 2024, made about $250 million in revenue, but they were about $80 million in the hole from a profit and loss perspective. And he has said that like some of the stuff he's been doing with Amazon, like his TV show that he's doing, it's like one of the most expensive TV shows in the history of television. And so it's possible that he's learned his lesson and he's going to sort of trim back. And it's not like that business couldn't be profitable. But you can also understand that from his perspective and from the perspective of Beast Industries, the holding company that runs all these different divisions, content is one you might want to lose money on, right? Because that's distribution. He has 467 million subscribers on YouTube. it's okay to lose a little bit of money to build massive distribution and then to monetize that distribution through other channels, right? So all the other businesses that he's gotten into, snacks, which is the Feastables brand, he tried Beast Burger, which has not gone very well. He apparently has a mobile phone service that's coming out soon called Beast Mobile. Now he's getting into financial services. Those are all examples of ancillary businesses that basically sort of reskin his brand in a different industry. He doesn't, and this is critical to understand, he doesn't like vertically integrate everything in that other industry he goes into, right? Anytime a celebrity sort of goes into a different place, they don't buy the factory and the widgets and hire workers and put them on staff. They basically add their brand to an existing supply chain and just kind of skim off the top and sort of see if what premium their brand can provide on top of that. And it depends on the industry you pick and how you do it in terms of how well that works, right? So Feastables is a good example. Feastables, I've never had the chocolate. It seems fine, I guess. I don't know that it's that much better than other chocolate that's out there.
People say it's good.
That's what I've heard.
I've not tried it either, but that's what I hear is like, it's so good.
I've heard it's good. And in addition to it being good, he has also made a big deal about ethically sourcing cocoa for his chocolate business in order to prevent or hopefully reduce or eliminate child labor and child exploitation around the world. Very aligned with his brand, right? Because in addition to like contest to earn money, he also gives a lot of money away, right? So like altruism and like doing good is a big part of his brand. And so like if you can ethically source cocoa, and his argument is the big chocolate companies could do the same, they just don't because they're lazy. Okay, well, if that's true, if there's just laziness built into a business model that you can go in and compete away and actually offer a compelling, good product at a good price, make money on that product. And by the way, Feastables, the same year that he lost $80 million on $250 million in revenue, he made about $250 million on Feastables, and he made $20 million in revenue. So clearly in chocolate, there's a way to be ethical, offer a compelling product at a compelling price, and make a profit on that. If you can do that, that's fantastic. And that's a win-win-win for everybody. Beast Burger is an example of one where he tried to do kind of the same thing and it didn't go as well. So in the same sense, he went in, found a supply chain, found a partner. I don't know if you ever had a Beast Burger. I hope not, for your sake.
I didn't. It wasn't even on my radar. This was during COVID, right?
This is during COVID. Yeah. And maybe during COVID, like this was more challenging. But the model was kind of strange because it was like you just order it in an app. There's no place you can go down and sit. They don't have like restaurants. But you can order it in an app, and it's delivered through this like decentralized network of ghost kitchens that was sort of managed by this sort of restaurant company that he partnered with. And apparently the burgers were disgusting. And there were lots of complaints. There were, people like filing class action lawsuits.
And if it's decentralized, everyone's probably getting a totally different product.
That's right. Yeah, because it depends on which kitchen cooks your burger. And like some Beast Burgers are okay, some are horrific, and it's all being delivered to you. And there's no quality control at all. And he ended up actually suing the company that he partnered with to do that over damage to his brand and his reputation, right? And so in that instance, I think what he learned is burgers, unless you're willing to invest in the infrastructure to get the kitchens, own the kitchens, train the staff, build the playbook, build the restaurant, like unless you're willing to outlay that capital expenditure at the top, this model of I'm just going to go in and use an existing supply chain and add my brand, you can't control the quality, you can't control the outcome, and you can't make a profit on it. And so the model is much less aligned. I mention that because financial services is really, really interesting. And you know this, having worked in the industry for a long time. In financial services, it's really difficult to be very profitable and to be very ethical and to navigate complex fintech banking as a service supply chains without taking large reputation or legal risks. To do all of those things well, you are walking a very thin tightrope, and you have to know what you're doing. And so when you ask, like, how is he going to sort of navigate this tension that exists, that someone like a Robinhood has navigated this tension by saying, basically, we don't care what outcomes our customers get. Like, we really don't care. In fact, we benefit financially if customers come in and just put everything on black. And then if they win, much like a casino, they just take all their winnings and they put it on black again. And then they win and then they put it all on black again. And then eventually they lose all their money, but no hard feelings, and come back once you get more money and we'll be happy to let you play our game again. Robinhood's whole business model is built around, like, just come in the door, transact, we'll take a cut of everything you're doing, all this volume you're bringing us, and we are in no way tied to the stake or the outcome at all. We win just if you come and play. That's a very easy way to make money in financial services. And if Beast Financial wanted to do that, they could, right? They could offer crypto investing. They could get into prediction markets. Robinhood doesn't call it sports betting. They call it investing. You invest in how many rebounds LeBron got last night.
Oh, they
against
call
the
it
Celtics.
investing? I thought they call it prediction markets.
Well, they call it prediction markets because they're legally required to, but they frame it as like you should diversify out of meme coins and meme stocks into sports betting. It's a good way to hedge your risks, Carlos. And
Do you happen to know their take on, say, the LeBron? Like, because a casino, I think, takes 10%. If you wager $100, they take $10, and then you're actually wagering 90. That's their cut. Do you happen to know what the house cut is on Robinhood?
I don't. I imagine that it's less. And so this is one of the arguments that, like, prediction markets make, as an example, is that we're just a decentralized exchange that just puts people who want to bet together, and we just take a very small cut out of the middle of that for arranging the transaction. And so I imagine that the amount is smaller because, unlike the house in a typical sports betting arrangement, you are not betting against the house. You are just participating in this platform. Now, that is not nearly as, like, harmless as they make it sound, because they have big institutional traders on one side of the trade, and the only way those traders will stick around is if they feed them guppies on the other side of the trade, and you're the guppy. And so it's not good, but I think the take rate is a little bit lower. And so what that means is Robinhood, Kalshi, Coinbase is now doing prediction markets. They all have to make it up on volume. So their margin isn't great, but they have to make it up on volume. So they bring as many people as possible. It would shock me if Kalshi, who's the sort of prediction market that partners with the Robinhoods and Coinbases of the world, it would shock me if they weren't already reaching out and talking to Mr. Beast about, hey, we should add prediction markets to Step. And you can bring your 467 million YouTube subscribers to this app. Now, again,
let me take it a step further, Alex.
Yeah.
And we're gonna have and this is playing on the side of things don't go well, or things go maybe in a less ethical direction. Yeah. But Mr. Beast hosts events, first party events, where the outcome is uncertain, and his fans can play the prediction markets on his and in fact, they can attend live. There's stadiums. Like, you could see how that could go all the way that direction.
Totally. I mean, it's not dissimilar from, like, the Colosseum in ancient Rome, except we own a prediction market that allows people to bet on their phones as they're watching this. I mean, like, that is dystopian, but not that far away from reality. And so you could see that, right? You can imagine that Mr. Beast ties his content into prediction markets, into investing, and it all just becomes one sort of, like, big pool. And there's insider trading, and there's rug pulls, and there's all this stuff that's happening. And, like, if he wanted to do that, he could make a ton of money. And Mr. Beast Financial could blow out all the other parts of his business in terms of its profitability. And by the way, you can do that without making any upfront investments, right? Much like the other things he's done, you don't need to own the factory that makes the chocolate. You don't need to own the restaurants that cook the burger. You don't need to own the underlying exchange or prediction market or anything. You can just be the distribution layer on top of all of that. So that would be one model that you could pursue. A different model, which is the model I hope that he pursues, is one where you operate more like a Chime or someone like that. And you say, look, and Chime, I've always given them a lot of credit. They don't offer crypto investing. And they've looked at it for many, many years. Obviously, their investors have asked them to add crypto investing because it's a very lucrative line of business. But Chime has looked at it and said, you know, we serve, like, lower income consumers. We serve people who are, you know, living paycheck to paycheck. We serve people who are trying to climb out of a hole. And crypto, even though over a long period of time, certain assets do fairly well, we just don't think the volatility that would introduce and the sort of gamification that would introduce is good for our users. So we're not going to do that. Instead, we're going to do basic blocking and tackling. We're going to give them access to deposit accounts, and we're going to innovate on the edges, things like 2-day early access to your paycheck. That was a brilliant product insight that Chime and a few other early neobanks had. Very easy to do. And kind of going back to the example I gave before, like Mr. Beast is saying, hey, the big chocolate factories could source their cocoa ethically. They just don't because they're lazy. It's the same thing in banking, right? There's tons of things in banking that banks could do to make their customers' lives better, like advance them their paycheck 2 days early. That never occurred to banks, even though there's no risk associated with it and has a huge value in their customers' lives, because banks were just like, they'll get it when they get it. We don't care. There are tons of opportunities, tons of safe margin to go after in banking to innovate in that way. And if Mr. Beast decided to do that, I think he could build a very strong, very durable, and, over time, reasonably profitable business. Picking the right partners, sourcing things ethically, making good choices, and helping customers build long-term wealth, where he orients it towards not revenue generated, but outcomes generated, right? So he orients it towards, over time, am I helping these kids? And again, the average age of his audience, I think, is less than 25 years old. Helping these kids get from being 24 to 34 and realizing a significant gain in terms of their wealth, their overall financial health, and their prospects for the future. That would be a different way of organizing that business. Now, that model has a lot less regulatory risk. It has a lot less reputational risk, but it's also less profitable in the short term. And so I am very curious to see, especially given that he has kicked the tires on a lot of crypto stuff, and it's not like he hasn't dipped his toes in these worlds. I'm very curious to see if he'll be able to sort of resist the temptation when Kalshi knocks on his door with a really good idea for how to change step and make it more profitable. I'll be curious to see if he leans into that or if he sort of shies away from that. And to me, that's a product choice and that's a reputation choice that we just don't know because, again, like burgers, chocolate, like it's fine. But like if you have a bad burger, you're not going to be like, I'm never going to trust Mr. Beast again, or I'm never going to watch any of his content again. You're just going to be like, yeah, the burger sucked, but I still like his videos. If your money gets lost, if it gets locked up because the underlying sponsor bank, let's say, fails to keep track of the money that you have, or he offers you an investment and you invest in it and you lose your life savings, that's a much more lasting form of reputational damage that I think really would hurt his brand in a very measurable way. And so I hope that's what he is taking into consideration as he thinks about what to do with Step.
Yeah, no, I like that a lot. I see the potential for a lot of good here too.
Yeah,
absolutely. I want to break down a little some other. Actually, what I want to add to one thing you said, and then add a couple dimensions to it. You mentioned, actually, you said like he has a way to, much like he did for the chocolate business, to source things ethically and do things the right way. One structural advantage he has right out of the gate is his cost of acquisition. I think if he runs this well, will be much lower than his competitors.
Oh yeah.
I mean, he has 500 million on the YouTube, right? So
I mean, any bank or fintech would kill for anything even in the vicinity of that. Yeah, it's incredible.
It's an amazing asset. Now you don't have to pay Lending Tree or CNN.com or send direct mail. So you just cut out a massive cost.
Totally.
And you acknowledged it earlier that he is paying money for that attention, and he has to monetize it through different vehicles, and financial can be one of them. But I still believe the cost of acquisition per unit is going to be way lower than most banks. I mean, Chase or Amex or these big financial companies, sometimes they're north of $1,000 to acquire a customer. I mean, and you can see it very obviously in the bonuses they pay. Right?
Yeah.
I think I saw one from Chase Sapphire this weekend for 150,000 points. And you do the conversion in their travel, it's at least $1,500 if you use the points like so. And if you're a points guru, you probably get 3,000 or more in value, right? So and they're just giving that away as an upfront. So you have that structural advantage, which I hope he can take advantage of to remove fees and to make products more transparent and more fair. I'm going to share some examples here in a second, Alex, where that did not happen with people with similar fan bases that did not take advantage of that distribution opportunity.
Yeah, yeah.
So it's not a guarantee. But the other thing I'm excited about at a industry level is this market, like the social media channel for most lenders, and I would even say for most consumer finance companies, has been, I call it iced. Like it's been kind of frozen. I think there's a bit of a market failure going on here. And just to depict what I see day to day, I see creators approaching brands, asking for the most recent example I saw was $85,000. It was an Instagram creator approached a financial brand and said, I'll do one post for you and I need $85,000 in return. And the brand was actually interested, Alex. They kind of wanted to do business here. And their follow-up question was, well, what will you guarantee? How many views, how many clicks, how many, like, they weren't even asking for guarantees on new customers or revenue. Just give me a sense for how much reach. The creator was unwilling to give any kind of guarantee. They ended up walking away from the deal.
Yeah.
Because they're so used to approaching brands from all kinds of categories where a guarantee is just not needed, right? And financial companies have a much higher bar for return rates, hurdle rates, et cetera. They're very disciplined on their marketing spend.
Yeah.
So that's part of the reason there's a market failure here. The other side of it is, even when they do reach a deal on the economic terms, now the consumer lender or the consumer finance company comes back and says, awesome, creator, we're ready to go. We're going to leverage your audience. This is going to kick ass. Here's your script. Here's your background. Here's the thing you're going to do. And they hand them like a playbook of what they're going to go do and say.
Yeah.
And the creator's like, actually, that's not how this works.
Yeah.
I'm going to tell you what I'm going to say because I'm the one that understands my audience and has trust here, et cetera.
Yep.
And that heavy-handed approach to compliance has also iced the market in the reverse direction. But when I talk to fintechs, both lenders and non-lenders, I see a very small representation of their new customers coming from social, which I find fascinating because there's just so much attention these days on social. And the typical mix is 5% or less, which I find kind of stunning. I'm like, really? I feel like it should be 10, 15, 20, maybe even 30, 50%. In some cases, the distribution for my business is 100% social. So I'm biased, but I think 25, 30 would be like a really healthy portion to be acquiring online. And I'm looking at this, wondering if Mr. Beast's acquisition of Step, assuming it starts to go well, is going to motivate and put a little bit of a fire under both the creators and the lenders and the financial companies to figure out how to make this work. Because there's no doubt there's a thing here. But we have to get through a lot of the friction. Like, what do you observe when you talk to both creators and lenders about this?
Yeah, it's a great question. I mean, I think the challenge, as you outlined, I mean, the return on spend is one thing, right? And I think that one thing that financial services companies are going to have to just get on board with is the idea that we're not going to quite have the same like programmatic. And you and I talked about this on a podcast that I hosted a while ago, right? Like, and it was a conversation about like the death of kind of Google advertising the way that we've always thought about it. Like, we lived through a period where you push a button, you get a customer. It's programmatic. You know exactly what your spend is going to be. It's wonderful. That's going away, right? And like in the same way that direct mail kind of got eaten by digital advertising, like I think we are headed into a world where trust brokered through intermediaries that people trust online will be the way that you acquire customers more and more. So I think AI is just going to accelerate all of this. And when that happens, you are going to have to get comfortable as a brand, and financial services companies typically don't think this way about marketing. you're going to have to get comfortable with less certainty, right? And it's not really reasonable to ask an influencer on Instagram, like, hey, can you guarantee any of these things? Like, that's not really how that channel works. I know as a creator myself, I don't guarantee these things.
Yeah.
You just trust that like my audience is going to respond if we do this well.
Yep.
And so financial services companies will, I think, get over that, especially when Mr. Beast kind of points out to them, hey, look how good this can work if you just lean into it. The second challenge, though, that you outlined is the one that's going to be more of a structural one, which is, and I think Mr. Beast will run into this too. UDAP is a terrible thing to get on the wrong side of. And it's really challenging. I even run into this more in a B2B context in my newsletter and podcast. You know, like depending on the company you're working with, it has 19 different layers of compliance and legal review that anything has to go through before you're allowed to say or do.
Oh, even
anything.
in a B2B marketing context?
Even in a B2B marketing context, which is way less sensitive than a B2C context. And it's not every company that I work with, but a lot of them.
Is that in the context of like a credit bureau, or what context
like,
does that show up?
Like banks, credit unions, credit bureaus, they're just very like sensitive naturally, right? And it makes sense because they just don't want to have a conversation with their regulator where it's like, you told your market what? You said what in this thing? Yeah. And like you just get tagged with stuff that is a compliance risk. And at a certain scale, you just learn to minimize that compliance risk. And what that does is it really does throttle marketing and creative in a way that, you know, like if you work for a large bank and you work in the marketing department, you're just beaten down to the point where, you know, like I have to get the creative for this done 6 months in advance. I have to run it through. I can't even consider doing these 19 things. And to me, that is very much like anathema with really good organic social media and influence based content, where it's like, you know, the reason people like Mr. Beast or like you or like me or anyone is they tune in just to hear us kind of riff and just say stuff, right? And the sort of legal and compliance model that exists in financial services is just not well suited to that. It's not compatible with that. And so I think that while we will see Mr. Beast put a lot of pressure on financial services marketers just from a like, oh my God, look at what they're doing. Can we do anything in this space? And I think that will open the aperture up a little bit. I think the market will actually stay more frozen than we might wish for, just because of that natural reticence to take that kind of legal or compliance leap and just hope like, you know, hey, we're going to trust the creator to do this. They're going to read the ad in their way, and we'll hope they don't say one of the magic words that gets us in trouble, right? And by the same token, I think it also impacts the type of financial services companies that will lean in more or less, right? And this goes back to our earlier conversation. The problem, the challenge with like a crypto or a prediction market or something is they don't stress too much about compliance, right? And so it's kind of like the comparison I would give you is it's kind of like fighting with hands tied behind your back or not, right? And so a bank, when it wanders into social media, sort of preemptively ties both hands behind its back and is just like, okay, I'm going to come into this channel and get my face punched in because I'm not willing to do the things it takes to compete in this channel. A crypto company or a prediction market, like they've gotten in all kinds of trouble for years over like misleading advertising, and you know, influencers have gotten sued for peddling like cryptocurrencies. Crypto companies just don't stress about this kind of stuff. Prediction markets don't stress about it. And so again, I worry from a Mr. Beast perspective, like if he wants to partner with responsible parties, one of the costs of that is going to be they are going to sort of slow down some of his marketing, right? And like to give an example, in traditional banking as a service, the way that banking as a service traditionally works is the partner bank behind the scenes, and in this case it's Evolve Bank and Trust, who historically does not do a good job of this, but if you had a good banking partner at the bottom of it, they would actually ask to review all your marketing materials. And if you launch a new ad or you put up a new web page describing a product, the partner bank behind the scenes wants to review all of that to make sure you're not violating any of these rules. Is Mr. Beast going to be cool with that? Like, does he want his partner bank checking every time he does a video where he mentions Beast Financial? I doubt it. I don't think he's going to want that. And by contrast, if he partners with Kalshi, they're going to be like, let it fly, man. Talk about whatever you want. We're not going to check. And so again, from a supply chain perspective, there are partners that will slow him down. And then there are partners who will say, we want you to be the most you can possibly be. And the quality of those two different supply chains and the outcomes they're going to create for his customers are very different. And that's another thing that's kind of an important nuance here.
Let's take a quick break in the action here, as I'd like to introduce you to our newest sponsor, Fintech Connect. They're an affiliate marketing platform that can help connect you to publishers, influencers, and manage your compliance. I'd love for you to check them out. You can find them at fintelconnect.com, FINTEL connect.com, where you can connect directly with their founder and CRO.
I'm marinating on what you just said there about the incentive structure from a compliance perspective.
Yeah.
I hadn't fully thought through that. I think it's scares me a little bit, actually.
Yeah. Yeah.
Because it's going to push creators like him into prediction markets and things like that. Actually, one thing I'll hit on, and then I'll give you my question on regulation, because I'm curious where regulators sit on all of this. But I guess to close out on how this could be really good if Mr. Beast executes, if he executes well, is just given his platform, the 468 million YouTube subscribers, and his reach is actually probably broader, because I know he's not just in YouTube. Sure. He's everywhere, right? He's on all this. He's on Twitter and Insta. I bet he's everywhere. These young folks, and predominantly I assume it's young men actually that follow.
That would be my guess as well. Yeah.
I don't know that for a fact, but just looking at his content, I think it's going to skew more male. I don't see a role model out there that has a big platform and is well respected, that can give an objective, rational view on how to make money, how to build a career, how to invest, how to resist temptations in gambling and sport. Like, I don't know who that individual is. There are probably many of those folks, but do they have big enough microphones to have an impact? Right? I don't know if you listen to Scott Galloway much.
I do.
I know he is super nervous about like the next generation of men. Kind of.
Yeah, he worries about young men. Yeah.
Yeah, like in the 18 to like 35.
Yeah.
He's just, and if you listen to his argument, I think it tracks for me. Just given the tools and kind of temptations they have at their disposal. So to me, it's like, if you're the CFPB, if you're an organization whose mandate is to do well by consumers in the financial domain, Mr. Beast starts looking like a really interesting partner, right? Yeah. Can I start to work with this individual to get responsible behavior and messaging out there? Because it seems kind of absent in today's world. So anyways, that's where I think it can lead to a good direction. But you know what this reminds me of, this whole prediction markets thing? I don't know if you were playing poker in the early 2000s.
Yeah, I remember.
But I was. I kind of got into it around 2003.
Yeah.
It's when Chris Moneymaker won the main event of the World Series of Poker.
Yeah, World Series of Poker was a big thing for our generation.
He won his seat for I think it was $50 or $60 on Poker Stars. He won a $10,000 seat, and then he won the main event. So he turned $50 into $2.5 million.
Yep.
And it just created this like massive wave of online poker playing. So then you saw Poker Stars, Full Tilt, Party Poker, Ultimate Bet. There were a number of sites. They all got shut down pretty much 2006, where the regulators actually started paying attention and they shut it down. I think rightfully so. I imagine a lot of people did damage to their personal lives, their personal finances. While poker is unique in that it is a skill game. It is possible to win.
Yeah, right.
Even with the house, and I know because I'm one of those folks. Like I studied the game and I figured out how to win. But it's a minority, right? If you look at and I think some of these sites report what percentage of their player pool are winners, what percentage are break even, what percentage are losing. And I think DraftKings or some of the publicly reported do the same. Yeah. And it's very skewed on the losing side. Yeah. It's like a 90-10 or an 80-20, something in that that ballpark.
Well, and then what the sports books do right now, and what the prediction markets will do at some point in the future, is they throttle good gamers, right? So like if you're good at sports betting, your app like stops working, and you stop seeing the best bets, and your limits get throttled. And so like they algorithmically will find the people who are good, and they will make the experience so bad that they basically have to leave the platform. And then by contrast, they have human VIP concierge staff who will call and work individually with people who bet a bunch of money and lose constantly. And so they curate that mix. They don't just let it happen or evolve organically. They curate it. And, you know, anyone who's in the business of doing that is going to do something similar.
That's interesting. So they help losers lose more, and they help and they help winners. They make it harder for winners to. They
escort winners off the property. Yeah, exactly. And it's like it's like counting cards, where it's like, technically not illegal, but you're not welcome in our casino. It's a similar vibe. I mean, the thing that's interesting to me about, and I like your point about, can Mr. Beast help with this, right? Like one way of framing it would be, can Mr. Beast save young men? Would be, I think, a really relevant question to ask at this moment. And you know, I think a couple challenges. You have young sons. I have young sons, roughly the same age. Young men are morons. And this is not like a value judgment. I was a young man. You were a young man.
N equals one, Alex, you nailed it.
Yeah, like they are stupid, and they are stupid until their like brains are fully developed, which only happens when you're like 30, right? So like, I mean, literally.
Yeah, for me, like, I was probably late 20s, something.
Yeah, like yeah. Well, and scientists have studied this, right? Like women's brains fully developed by the time they're young adults. Men take like another 10 years for their brains to fully develop. Like their frontal lobe is still growing. So like we have to save young men from themselves. And, you know, to your point about like offering young men tools, you know, this is the same thing that motivates, like they do these funny surveys. Like one of the ones I saw recently was like 70% of young men think that they could like fight a grizzly bear hand to hand and win. Like men just feel like they can do things that they are utterly actually incapable of doing. And so when you offer them investments or gambling or things where it's like, hey, if you're good at this, you can have this outcome. And oh, by the way, look at all of these famous people who are personifying what winning looks like. If you can do that, you can join them. Like every 25-year-old guy is going to be like, I can do it. I'm sure I can do it. Like I remember reading about what was the Ben Mesrick book on 21 on counting cards in Vegas. Like, I went through a phase where I was like, you know, I think I could do this, and it's like, no, you can't. Like that's a trap. But everyone feels that way, and so I think
that's part of the reason that book was a bestseller. Just the subject matter. Yeah.
Right. Like I remember talking about it with my friends and being like, should we go to Vegas and count cards? Like in your head, you're like, I bet I could do this if I just took the time. And so we do need a way, I think, to save young men from themselves. And I am intrigued by the idea that Mr. Beast, given his reach, could play that role, right? It almost reminds me a little bit of how the government in the 70s, 80s, 90s partnered with a bunch of celebrities and put a bunch of money into anti-smoking campaigns. Right, to make smoking not cool rather than cool. And they, at the same time, they legally limited how tobacco companies could advertise their products, and then they spent a ton of money on advertising the other side of it. It sort of reminds me of that, where it's like, and this is me dreaming because this is not going to happen, but like I would love to see a future CFPB get $100 million from Congress to advertise to young men how to avoid losing their life savings through gambling apps, while at the same time passing a law limiting what gambling apps, whether it's a traditional sports book or a prediction market, doesn't matter, how they are able to advertise to customers. Because if you look at the advertisements that come from like a Kalshi right now, they're enormously irresponsible, right? I mean, they advertise Kalshi as a way to pay off your student loans, which is just not true. And I mean, quite frankly, it's evil. And like that is eventually, I think, going to have blowback, right? I mean, we are living in a time right now when there are no rules, there is no regulation. Regulators say, do whatever you want. So that's why gambling apps and services are ascendant right now. And if Mr. Beast wants to lean into that in the short term, he can do that, right? I mean, again, not to pick on them, but they deserve it. Evolve Bank and Trust is his partner bank. They are not going to say no to anything. They're going to let him get away with anything. Regulators are going to let any companies that Mr. Beast wants to partner with, whether it's Kalshi or Coinbase or Robinhood or what have you, he's going to be able to do whatever he wants over the next couple of years. However, if he were listening to this, what I would tell him is after the next 3 years likely comes a different regulatory environment. And it goes back to your poker example perfectly. This got shut down, right? Like you can only hurt consumers for so long before the government steps in and stops you. And when that happens, there will be a big backlash. It will have a lasting reputational and perhaps legal consequences for the people who enabled it in the short term. And I just think, like, if I'm Mr. Beast, and I give him credit for this, right? He's very sensitive to his reputation, as he should be, having the reach that he has, right? Like the reason he sued the partner that he partnered with on the Mr. Beast burger is because like it damaged his reputation. And I think he's learned over time to be very careful with the products he launches and the partners that he chooses in order to make sure that the money he's spending to grow his audience is not wasted money. And, you know, you don't want to have a hole at the bottom of your bucket from a distribution perspective. And I think reputation damage can be that hole. So I'm hopeful that he leans into the direction of, I want to help young people, particularly young men, not give up hope, right? I mean, to me, one of the most important things, and this is where I really ding like the Robin Hoods and Coinbases of the world, is they're in the business of convincing young people to give up on their financial dreams. Give up and come gamble is basically the model that they have. And if Mr. Beast could be the opposite of that and say, you know, look, I get it. Like, homes are more expensive than they have ever been. The value of a college degree is less uncertain than it's ever been. Like, I get it. But that doesn't mean that you need to give up. That doesn't mean, it doesn't even mean that you should want to be a content creator because it's the only way to get out of this. Like, he should be able to speak to young people honestly and say, look, like, you think content creating is a way to just get out of it? I mean, Carlos, you and I can talk about this. Content creation is a grind, man. Like, you have to do it because you love it. Yeah, I mean, it is really, really hard work, and it's not for everyone. And, you know, maybe you should be a nurse or a teacher or, you know, a fireman or an artist or a writer. Like, follow your passions and don't give up hope about your financial future. Yeah. Like, that's what that Mr. Beast channel on financial literacy could be about. It could be about giving people hope, giving young people hope. And to me, that's the best case scenario.
Well, back to regulation here for a second.
Yes.
You alluded to maybe in 2 years' time ish, if there's a change in regime, this stuff could get wiped out. So I think Trump's been in his seat, a little over a year now. These fantasy sports, prediction markets, I think they grew materially under the prior regime, under Biden. So I guess I don't have the faith you do that with a regime change, anything really changes as far as the regulator. Where are the regulators? Where do they sit? And I know you spend some time in DC. I don't know if this is a topic you dive into, but where does the Democratic side of the House sit here, and why did this category explode under their watch?
Yeah, it's a great question. So I think there's two parts to it, right? One is that I think regulation tends to follow crises, for better or for worse, right? And one of the things I ding regulators on a lot frequently is I'll say, look, you know, I know that the last crisis was this thing that you're still focused on, but the next crisis, we can see it right now. It's going to be this thing over here, right? And I've been screaming about prediction markets and financial nihilism and gambling for 18 months. And it's not hard. Lots of people have. It's not hard to see this crisis coming, but regulators tend to react to what happened last time, not this time. And so one thing that you could worry about would be, you know, gambling and sports betting and prediction markets not blowing up quite yet. Democrats getting in charge again, being in charge of financial services regulation, and them going, well, hey, shouldn't we go back and fix this banking as a service stuff? And it's like, yes, but like that's not our biggest problem now. Our biggest problem is this thing that's about to blow up. Maybe you should try to get ahead of it. And I can't tell you the number of times that I begged in my newsletter for the CFPB under Biden to focus on this or this or this. And they wouldn't always do that. Like they don't always go to where the puck is going. Sometimes they go to where the puck has been. So that's one problem. I will say, in slight defense, I suppose, of the regulators under Biden, I think they did do a good job. And you could argue maybe they went too far, but I think they were very reactive to certain things that broke, right? So like use crypto as an example. One of the reasons that crypto swung so hard to the right in the last election is because the Biden administration really clamped down on crypto after FTX blew up and all that stuff happened. So they had to wait until a crisis happened. But once it did, they were very responsive to it. And I think that, you know, if there's a change in administration and if, Democrats sort of put regulators back in seats, particularly at a federal level, we will see a major clamping down on crypto. I think we potentially will see a major clamping down on prediction markets, on sports betting. And what's interesting, Carlos, is the other thing I've noticed, this really runs up against states' rights as well. And that's the sort of hidden thing with a lot of financial services regulation is we have federalism, right? And so we have the states and we have the federal government. And one thing that's been really fascinating is Republican governors in different states like Utah have actually come out really strongly against prediction markets and have said, look, this is gambling. This is sports betting. And like in a state like Utah, we have the right to keep sports betting out of our state entirely if we want to, right? And Kalshi argues that you should be able to go to church as a Mormon on Sunday and as a young man have sports betting on your phone and be able to gamble in church. Like they argue that that is your legal, federally mandated right. And so that is actually creating a lot of disagreement between the federal government and the states that is not breaking cleanly along Democratic and Republican lines. And so all of that is to say, it gives me hope that while things are probably still going to have to break in order to get fixed, like we don't deal with crises in advance very well in regulation. We never do. I do think that it will break. Like this, what we're doing right now is just not sustainable. People are going to get hurt in a large number, and that will happen probably sooner rather than later. So that's going to happen. And B, when it does, I think we are going to see a response from government, from regulators, and I think it might be more bipartisan than you might otherwise expect, just based on what the dynamics we're seeing right now. Like there are lots of Republicans who don't like crypto. They're afraid of crypto from a lobbying perspective, but they don't love it. And there are even more of them that don't like prediction markets, sports betting, all that kind of stuff. And I think we will see a bit of a coalition form against this stuff within the next 2 to 4 years.
Got it. Do you recall, you're framing on the crisis is what's going to trigger the action that lands.
Yeah.
I'm trying to think back to 06. Was there a crisis because that's when the online poker, and there was actually a site called Trade Sports. I don't know if you remember this one.
I don't.
It was an early incarnation of Kalshi. It's the same exact thing where you could buy a share and the share resolved either into $1 or $0. And, it traded on sports, it traded on politics, it traded on all sorts of stuff. So that was, the first I saw that site was probably 2004. And then it went down in 06 along with everything, like all the poker. But I can't put my finger on what that crisis, I know the mortgage crisis was brewing, but it hadn't happened yet. Yeah.
It's a great question. I mean, I think one thing I've noticed about Congress in particular is, I'm trying to think of the right way to say this. They don't read fintech takes, but they read the New York Times, if that makes sense. And so when things make it into the mainstream, culturally, from a news perspective, whatever, that to me is when Congress tends to act, right? I'll give you another example. The CARD Act in 2009 famously restricted a bunch of credit card advertising, including on college campuses, right? The reason that happened is that one of the people who was in Congress at the time had a grandchild who went to college and got credit card offers. And the person in Congress saw that personally and was like, what the fuck? And then they passed the CARD Act and did all of that stuff. And so sometimes it takes it breaking into the mainstream in a way for it to really kind of rise to the level of attention. And that's why I think we're not so good at regulating things that sort of exist in the shadows very well. And there's lots of, like, I'll give you an example. When Synapse and banking as a service blew up, that was a hard one for Congress or regulators to understand because it was so complex and it was so niche and it was behind the scenes. Like I remember talking about Synapse sort of in the abstract a year before it blew up, being like, hey, we're going to have a problem here. But you have to be quite the financial services infrastructure nerd to see those problems coming from a first principles perspective.
Yeah.
Most people can't. But the difference to me is, like, Kalshi is huge now. I mean, like, I don't know if you saw the Super Bowl, but like they were paying for cabs to take people to the Super Bowl. They were like blanketing Las Vegas with advertising during the Super Bowl. And so like they are very, very prominent. Everyone knows who they are. Congress is really locked in.
So who are they bringing to the Super Bowl? Was it like spokespeople or?
No, they were just like if you want a taxi to the Super Bowl, we'll pay for it. And you have to get in a Kalshi cab or whatever. So just like a little kind of viral marketing stunt that they were doing, and they blanketed all, and this really pissed off the sports books and the regulators in Nevada, but they were advertising everywhere in downtown on the Strip during the Super Bowl. Kalshi is the way you bet. And so like they are visible in a way that, and they've raised a ton of money from VCs. So like they are just at a size and a visibility where the New York Times knows about them, Congress knows about them, and I think that level of visibility combined with, we're just going to start to see bad stories and bad outcomes. I mean, you remember when the young man who committed suicide after seeing
the Robinhood one,
his balance in Robinhood. Some stories like that are going to happen. And I really, that's the thing that is horrible about this, right? Is that, and I'm glad we're locking in on this framing for this discussion. Like, it's not, this stuff isn't just cute, fun, whatever. Like, for a portion of people whose brains are wired a certain way, this leads to really addictive behavior. And if you talk to behavioral specialists, they will tell you gambling is the most addictive of all of the sort of addictive things you can do. Like, it is, for people whose brains are wired a certain way, it is really damaging. And it leads to really bad externalities, right? It's not just the person who gets addicted to gambling, it's their spouse, right? And they've studied the rise of mobile sports betting. When mobile sports betting is legalized in a state, the rise of intimate partner violence goes up, and you can actually hone in on the level of that happening being correlated when the home team loses in an upset. You see a spike in intimate partner violence, right?
Yeah.
I mean, like,
I saw that in you put that in a newsletter, right?
Yeah. And it's like, I just think that's really important for everyone, including Mr. Beast, to think very seriously about, right? I mean, like, again, this is the difference between chocolate bars and burgers and financial services. Financial services is real life. I think the only industry that even deals with things that are close to what we deal with in financial services is healthcare, right? Like your money and your health are the only two things where it's like, this is literally a life or death thing. We can't screw this up.
Right.
And so I think it's absolutely fine. I think it's great that Mr. Beast is buying Step and is going into the space. I think he's a very thoughtful person about the world, about ethics, about altruism, about helping his audience do good in the world. Like, I think this could be an amazing opportunity, but it comes with a level of downside risk that I don't think he's ever dealt with before. And that as an industry, I don't think we've ever seen this combination before. And so it's worth asking these questions and being really thoughtful about it.
Yeah, no, there's definitely something in the water right now. Like, I mean, just to give you an example, I recently learned of this one. I think it was last week. I heard there's about a 6-week event that happens every summer in May, like mid-May through early July. The World Series of Poker. It's about 100 tournaments. But people, recreational players, professionals, all the people. It's where the Chris Moneymaker thing kind of got going. That's where poker took off. Apparently, they had a record-breaking year last year, and I was a little puzzled by that because the record breaker they had in 2006 was fueled by all the online sites because you could very easily win a seat for $40, $50. These days, for the most part, you have to go and pay for most events between $1,500 and $10,000.
Yeah.
So we're not talking $100.
That arbitrage opportunity that existed has been arbed away, basically.
Yeah. So these events are big ticket for most people. I learned that you can buy into these events as long as they're 10,000 or less with a credit card.
Yeah.
With a credit card, and it's even more interesting, Alex, without a fee.
Really? Wow.
Wild.
That's not typically what you see. Merchants, like, I mean, to your point, merchants don't usually sign up for big credit card purchase, waive the fee. That's typically eat the fee. That's not typically what they do.
Yeah.
And it goes to your point about if there's demand for an activity that is harmful to the individual, like I think we are in a moment right now. I mean, we are seeing, you look across the board, every single activity that is like a speculative high risk path to wealth is booming right now.
So we need Mr. Beast to step up here. There's a moment where, I mean, I think he can step up and do a lot of good.
I agree.
For consumers, for young men in particular. So I'll be watching this one closely. It sounds like you will too, Alex. I appreciated your take here today, but yeah, no, I have to be honest. I have mixed feelings about this one. I want to be optimistic around all the good that can come of it, but man, there's a lot of structural forces here that could send this into a worse place. So I sure hope that's not where we end up, but it feels like we're moving in that direction, at least right now.
I agree. It's a very narrow path that he's going to have to walk to do this well, and I think you're right. I'm optimistic because he has the scale and I think the general mindset to do this well and to do it well at scale in a way that no one else ever has. And that's the upside. But the downside is there are just a lot of structural forces that are going to make it much more challenging for him to do this than he thinks. Financial services is just harder to build, to add a layer on top of the stack than it is in other industries. And there are a lot of structural forces that push anyone trying to make money in financial services right now towards a very dark place that we've been talking about. And navigating that will be a huge challenge. And I'll be watching very closely. I wish him and the team a lot of luck on it because it's an important challenge to overcome.
Cool. Well, before we wrap, I want to encourage everyone to go to fintechtakes.com, sign up for Alex Johnson's newsletter. It's where are you? 50,000, 60,000 subs, something like that. Yeah. It's one of the bigger ones in the fintech community. Alex, it's always a pleasure to speak with you, and I appreciate you taking the time.
Thanks for having me on.
I want to take a quick break in the action here. If you want to support the show, the number one thing you can do is go to thefreetoaster.com and sign up for our newsletter. You're going to get a couple pieces per week of news, information, insights, and podcasts like the one you're listening to right now at the intersection of marketing, lending, and technology. That's our niche. We don't plan to go outside of that. It's the only publication I've seen out there on the internet that dials into this zone. So if you want to support us, sign up and share it in your favorite Slack channel. This is a quick plug here for my marketing agency. It's called New Market Growth. We do nothing but help fintech lenders accelerate their growth in affiliate marketing channels. Our services are both strategic and operational. And if you want to learn more about how we can help you, find us at newmarketgrowth.com or email me directly at carlos@newmarketgrowth.com.